Hello everyone, I'm Dr. Stock. In this video, I'd like to talk to you about 3 different stocks, all of which I've featured on this channel before, but just updates on the prices that we've had, the recent action that we had, some earning news, delivery news, and I think it's overall some good information. So go ahead and stick around. Let's get ready to rock. Welcome back. For those of you who are interested, down in the description is a link to my Patreon. By going over there, you get access to my growth portfolio, which has rallied very strongly recently, my dividend portfolio, which has been a champion since I started on February the 1st, also my weekly newsletter, my weekly watch list of stocks, my Patreon exclusive content that throughout the next couple of weeks and months, I'll be scaling up the amount of offerings that I have over there. So check it out, see what you think of it. I better move on. That link is down in the description. Also down in the description is a link to WEBULL. By clicking the link, signing up, and depositing $100, you get 2 free stocks. I get 2 free stocks for the referral. Thanks ahead of time for any support that you guys show this channel. I really appreciate it. One other way that I'd like you to support the channel is by clicking the subscribe button, hit the like button, hit the notification bell so you can see anytime these videos come out. Share it with your friends so we can grow the community. Thanks again, and let's move right on to the stocks. Alright, so the first stock that I would like to take a look at is ChargePoint, and let me see if I can, there we go, wow, there's some really quick zooming there. So this is a look at the daily chart for ChargePoint, and you can see the wild ride that it had all the way back when it was Switchback Energy, and then the merger announcement happened. We had the big sell-off in tech and all the growth stocks and everything, and all the SPAC that took place. We have this really nice support line here at about $19.40. So at least if this is one that you're not invested in, or in that you're looking for a way to play something here, this would at least allow you to know the downside risk that you would have. And it's pretty substantial from where it's at right now. I don't know that we'll see these same lows. We're getting a lot of pressure from those sell-offs coming off of these growth plays that we have, like ChargePoint, that is tied in with the EVs, renewables, and also tied in with Biden's infrastructure package. So you can see recently it's had a pretty good rally. We want to make it back up over this little hump that we have here. The lows have stayed pretty much about the same, like I said, around like $19 to $20 or so. But these highs, we want to see this high break this previous high that I had here, and we can see the lows are moving up slightly. If it does come back down, we don't want it to come down as far. So that would be overall the best of what we're looking for. If it trades sideways for a while and some of the volatility calms down, we'll be in good shape there as well. So ChargePoint, it is my favorite out of the EV charging plays that we have. And if we take a look at the analyst estimates here, you can see we're still underneath the 12-month price target of $28, and by about $2 from today's closing price. So about, I don't know, 7 or 8% or so down from that. So if we look at the average analyst estimate on here on 38.50, I believe it's a little bit above what it is on tip ranks. We still have a fair amount of upside potential from where we're at right now with ChargePoint, somewhere around that 30 to 40% mark. Let me switch over to my web browser. So when we look here, this is tip ranks for ChargePoint, and you can see 36.67 is the price target, and there's that 40, I said 30 to 40%. According to tip ranks, it's 41.26% upside from the $25 price target that is currently assigned. So tip ranks, along with what we see from the analyst estimates in WEBULL, gives us a decent idea of what to look for over the next 12 months for ChargePoint. So it's not quite as rich as it was, but we still have a fair amount of upside from here, from one of the leaders that we have from EV charging. So this is a play that I think has a relative amount of safety. Although they still are a growth play, there's still a significant amount of risk. But out of the growth plays, I think that this is one that stands to really benefit from the proliferation of the EVs. Speaking of EVs, let's take a look at Nio. And Nio had their delivery report coming up, and you would expect from their deliveries being a miss. They were supposed to be around 7,100 or 7,100. They ended up being, I think, 6,711 was the delivery number. And as far as being on pace for their forecast of 21,000 up to 22,000 vehicle deliveries in Q2 of 2021. Right now, this puts them slightly behind, and they cited that it was semiconductor shortage and that's a known problem that we have. We also had good news today that the semiconductor factory that had the fire, they're going to be back up and running in June, I believe was the report on that. And Nio also said that they're not changing their guidance for vehicle deliveries for Q2. They're expecting the deliveries to still fall from 21,000 up to 22,000 for the quarter. So that would be absolutely excellent. And if we look at Goldman Sachs had an analyst come out and say about 95,000 deliveries total for the full year 2021. So by the end of the year that we would hit that. So that would mean that there's going to be an acceleration in deliveries expected from Nio going forward. And 2022 is actually expected to be their even bigger year. So that really gives us some positive things to look forward to with Nio as we go forward from here. And this is sort of a similar case to ChargePoint in that we want to beat this previous high that we had here. And if it does settle a little bit from this day, today it was up almost 10%. If it does settle, we don't want it to see it settle as far. I don't know that we'll see that $30 anytime soon. We would have to see significant macroeconomic news or maybe just terrible news about the company in the first place. And I don't expect either of those things, but that's the thing about black swan events and macroeconomics is that you don't always know what's going to take place. So there's always going to be some sort of risk involved. So just be careful as you go through with these companies. So when we take a look at the analyst estimates, we are way above the low analyst estimate of $13.11. It looks like we are well on our way towards this average estimate of $53.13, and that's based on 22 analyst estimates. And if we take a look at what TipRanks has to say about it, here's Nio for TipRanks, and when we take a look at that, $60.79 is what we're looking at, so a 43% upside. So we're currently trading just a little bit rich, but making 43% on your money for Nio over the next 12 months. That doesn't sound too bad to me, especially if we really hit those numbers or if we get good sales. Remember that there is always some sort of risk. We could see it trade lower. We could see it not meet these targets just because it's there. But these are ones where we want to take advantage of these calls from people do a lot of their research on this, that they see the same things that we're seeing when we look into these companies and that we're looking for that same strength. And so Nio making back up to that $60 mark is something that they see over the next 12 months. So it could also be something that we see from their price right now, trading over $42 per share. So it's nice to see it back up in the 40s, and I hope that we get to hang out here for a while. And even if it trades sideways, again, I'm okay with some of the volatility calming down and seeing slow, steady growth. Those are things that would be just healthy in general for the market. All right, the last one that I have for you is Digital Turbine, and I was really surprised. I thought that we would hold this bottom range that we have here somewhere around the $70 mark or so. And so when it started dipping, I bought into it, and I think I bought in right around the bottom thinking that we'd trade back up, and then it just failed right around the $77 mark. And then recently we had a sell-off dropping down all the way down to 52, all the way down to like $53 per share. The low here is 53.02. And then we've had a decent rally since then, and then we get a decent amount of volume compared to these previous few days that we've had. And so that's nice because it helps confirm some of that strength that we see in the prices by the volume coming back into this. Digital Turbine closed up 2.33%, and it closed at $67.71. And this one, if we look intraday, we can see this big candle topping out at 71.04. And the reason that we had the jump is that they reported their preliminary earnings. So when we take a look at their earnings, let me share out. I have a few of these open in web browser already. All right, so here's the reason for the jump is that Digital Turbine had a beat on their earnings per share of 5 cents and then the revenue was in line, and the revenue of $95 million. Check that out. It over 2x'd year over year. As a matter of fact, that momentum is expected to keep on going as they look forward. When you look at these revenues here, they're absolutely huge compared to what there was from before, and it looks like it's going to 2x again. And some of this revenue that you have here is from their acquisitions. They acquired 3 different companies. One, I believe, closed around May 25th or something like that, and the other one was in April, and the third acquisition, I have that open on a different page. That was already closed, and I believe that it was in before March the 31st. So one acquisition was already in from last quarter, and then this quarter are 2 more acquisitions. So I don't know that we can extrapolate from here and multiply by 4 and look at full quarter or 2022 earnings for all 4 quarters. So just be careful when you read into that, because the revenues from those other companies, from those acquisitions, are also counted here. So we'll see how that plays out over time. The companies that they acquired, one was called Appreciate, and you can see March 2021, so that was in this most recent fiscal quarter. And then Ad Colony, April 2021. This one's revenues, I believe, are being counted in the next quarter's revenues already, so that's one reason for the spike. And then Fiber is the newest one, and it says expected to close in the current quarter. And I saw somewhere, this is their investor presentation, but I saw in a news article, I believe it said May 25th, that they actually did close that. So maybe this wasn't updated by that point in time. And this should be this is the May presentation. So when you look at this could have been finished prior to them closing or finishing the acquisition with Fiber. I just want to share 2 slides with you from this, and just because I think that this is pretty cool. So the revenue from their single tap product is scaling rapidly. So this is from their acquisition of Appreciate. You can see previously it took them 3 months to get $1 million in revenue, and then down to 1 month, so 3 times faster, and then down to just 1 week, so about 4 times faster accruing that revenue. So really seeing the results coming out of that acquisition from Appreciate. So we'll see how this plays out. The other slide that I want to share with you is this one, and you can see Digital Turbine with their on-device solutions, because they do a lot with advertisements that they have through different companies' apps. So when you see those apps come up on your smart devices that you play, Digital Turbine can be in the background of that. You can see Appreciate is taking up part of that with the programmatic ally, they call it. And then Ad Colony coming in on the front end of that, and it looks like on the back end of that. And Fiber has yet to be counted in that one. So this should be something that also contributes significantly to their revenue streams, and hopefully it translates to the bottom line, and hopefully we also see an increase in margin from Digital Turbine moving forward. As far as upside potential, from the price of $67.71, this one has a 52% upside potential moving forward, and this is again according to tip ranks that we see right here, $103.20 as that average price target, and that's off of 5 analysts. You have 4 buys and 1 hold from that. So just taking a quick look back at WEBULL, and this right here that we're looking at is the 30-minute chart, just to see a little bit more of the intraday price action that we have. And you can see this climb that I had from $62 all the way out to, well, now it's $69, just trading in the after hours. And the closing price that we had on this was, that's right, closed the day at $67.71. So this is some fairly exciting news that we continue to see growth coming out of Digital Turbine. Let me go back to the daily chart. I like to look at longer time frames for companies like this. So I really bought this as more of a range play, expecting to get back up here to these lines of resistance that we have around that $93 mark. And then right now we're sitting somewhere at a fairly strong resistance area. So this is a place where we want to try and break this level of about $68.48 or so. Let's toss up the 200-day EMA. You can see we dip below it just a moment. We still have a positive slope flattening out a little bit on us. We want to see that turn back upwards to continue that bullish momentum that we have going. And staying above it implies that the stock is already bullish as it is. Let's put up the 50-day simple moving average. So when we look at the 50-day that we have here, you can see it is tapering off after that sell-off. Before they were moving together, and now they're narrowing inward. As the candles come up near, as those prices come up near that average, that can act as a line of resistance for us as well. So it's just another one that we want to pay attention to as we go forward with Digital Turbine. So it's a company that does a lot with ads for generating their revenue and ultimately into their profits. And it's a rapidly growing company, and they're trying to right now take advantage of like $340 billion advertising market opportunity, and they're right now I think at somewhere like a third of a percent or something like that they're just barely dipping into. That's if they meet their goal of $1 billion annualized. So let me summarize. ChargePoint, love ChargePoint. I have a position in ChargePoint myself. It's in the growth portfolio, and honestly, from the price that I was in, it is a lot of it was purchased on profit in the first place because I was in very early when it was in I think the mid 20s or so was my initial position, and I sold out of that position when it was up in the 40s, and then I bought back in somewhere around like $37, not anticipating to sell off as strongly as it did and as quickly as it did as far as that goes. So even though I bought some of that with profit, and then I spent just a little bit more, I still have sort of an overbalanced position in that one, and I'll just hold on to it over and watch as time goes on. If we get near the end of the tax year, I might cut some of my losses and I might use some of that money somewhere else. We'll see how that goes. Nio, I'm very happy with my Nio position, and I absolutely love to see some of the strength come back to the stock, and it's excellent to hear about their guidance that they have for their deliveries, and that Goldman Sachs is saying 95,000 is what they expect by the end of 2021, and that 2022 should really be a big ramp-up year for them. I think that there's a lot to be excited about for Nio going forward. Finally, Digital Turbine. Digital Turbine, I think, is a company that has a lot of room to run. I think that it made some excellent acquisitions, and I think really watching how those acquisitions synergize with the rest of the company and how they can use them for their benefit, for pushing the envelope for those top lines, really maximizing those revenues and seeing it translate to the bottom line overall, I think will be a really strong thing. Some of those acquisitions that they've made, some of those one-time costs that it took for those acquisitions, that might really steal away in the short term with some of the numbers that we see, especially affecting the bottom line. However, as the company matures and as they continue to grow, we should be able to see some strong numbers still come out time and time again on Digital Turbine, and that's ticker symbol APPS. I'm not sure if I mentioned that one. APPS is the ticker symbol for that one. So that's what I have for you today. If you guys want to check out my Patreon, that link is down in the description. Also down in the description is the link to WEBULL. Again, you can click it, sign up, deposit $100, get your 2 free stocks. I get 2 free stocks for the referral as well. If you haven't subscribed and you'd like to, go ahead and do that. Hit the like button, hit the notification bell, share it with your friends. Remember, these videos are for entertainment purposes only. Always do your own research and due diligence. Contact a financial advisor before making any financial decisions. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.